Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.
What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about bullish and bearish divergence. So what is divergence? Okay, this is a concept that can really kind of help you in trading and making decisions about the outcome of future moves, okay? So the outcome of future moves. So when it comes to divergence, what is it? Okay, what does diverge mean? Diverge means kind of to separate, okay? It means to go apart. So converge means to come together, and diverge means to separate, okay? To separate from a route, okay? So if we're looking at the charts, what does that mean? What is convergence? What is divergence? So convergence, first, let's talk about. So convergence would just mean if the chart is going up, if your price action is going up, and your momentum indicator is going up, that is convergence. Convergence. Okay? So that's good. That's like, okay, let's get some calls. Let's get some calls here. All right? Now, what is divergence? So divergence is, again, let's see. Our price is going up. Price is going up here. Let's take out these guys here. So price is going up. But what the heck is going on over here? Price is going up, and my momentum indicator is showing me that our momentum is going down. So in this case, I'm like, calls? No, because it's not converging. The only time you want to really take something in a direction on the chart is if the direction on the chart matches your direction on your momentum indicator. So that's like for your MACD, your stochastic RSI. I use a volume RSI. So if you see here, volume RSI, I use a volume RSI. So if price is going up and my volume RSI was going up, then I'm getting calls. If price is going up and the volume RSI is coming down, I'm waiting for a short opportunity. And in this case, today on IWM, so we traded IWM today, and I told everyone in the Discord, I was like, hey guys, price is going up, but the volume indicator, the volume RSI is coming down. I said, be careful. Do not freaking take calls. Do not take calls, okay? So just what I said, wait for an opportunity of a market structure shift, which is depicted by the 9MA crossing the 20MA. I literally said this in the group. Watch for the 9 across the 20 and just take puts. And what happened? I took puts right over here. Okay, we had this 9 cross the 20. The volume RSI was coming down when price was moving up. That's fake price action, okay? That's going to be a liquidity sweep to the upside. And then we also had what looked to appear to be pretty much a head and shoulders pattern here. Okay, it's kind of looked like a head and shoulders pattern, which is a bearish sign. Okay, so we had that bearish sign there. We had this bearish. This is called bearish divergence when price is going up. Divergence. Oops. This is called bearish divergence when your price is going up and then your momentum indicators coming down. Now keep in mind, momentum indicators are called oscillators. They're off of the chart and then they kind of go up and down and oscillate based on the momentum, volume, MACD, moving average, convergence, divergence, RSI's relative strength. Okay, so on the chart, these are overlays. These moving averages, they're overlays. All right, but your momentum indicator is down here. Okay, and momentum indicators are oscillators. Momentum indicators, meaning they move up and down. Oscillators. And then your overlays are just on the chart. Overlays equal on chart. And keep in mind that overlays are lagging indicators, and oscillators are leading indicators. Okay. So those things are just things to know, but I don't think they're important when it comes to trading. People are always going to be like, oh, those are lagging indicators, they don't work. You use indicators as pieces of evidence to get into trades. You don't just say, oh, the 9 crosses 20, let me get in. You don't do that. You say the 9 crosses 20. We're taking out previous lows. We're breaking structure. We had a liquidity sweep to the upside. Our volume RSI, which is our momentum indicators, coming down. You collect evidence like Sherlock Holmes. Okay, this is not like there's one magic indicator. Everyone always tries to sell their magic indicator. There's no one magic indicator. There's a combination of what's going on in price action, what's going on in the markets, what's going on with news. You got to collect evidence to make your predictions about future price action. Now, since this is bearish divergence, there is also bullish divergence. Okay, there's also bullish divergence, and since I don't really have a good sign of it, I'm just gonna draw it on the screen here. Okay, we're gonna draw it on the screen. So let's pretend. So bullish divergence would look like this. So we're getting higher peaks on my volume RSI. Okay. And let's make some magical bars because we can put some bars in here. Ghost feet. All right. So price is going like this. Oh no. We can do this. There we go. All right. All right, so let's say price is coming down. Price is coming down, but the volume RSI is coming up. So this would be considered bullish divergence, which basically is telling us that there's a lot of bullish volume coming in. Get ready for a reversal, okay? Get ready for a reversal. So that's why it's very important to kind of use some of these momentum indicators, okay? Use a momentum indicator because it can kind of show you what's incoming. All right, so leading indicator, right? So some of these momentum indicators include an RSI, which is a relative strength index, and then there's the stochastic RSI, which has a little bit more data points, and I like it. And then there's the volume RSI, which is my favorite, which different from the relative strength index. The relative strength index kind of gives you the relative strength in terms of pricing, when the volume RSI gives you the relative strength of up and down volume. It gives you an idea of how much up volume there is incoming and how much down volume there is. Okay, so that's the volume RSI. And then there's the MACD, which is the moving average, if I could spell, moving average convergence divergence, which uses a formula. So it's all pretty similar, but the one that's most different that I like the most is going to be stochastic RSI, and volume RSI is really the best one. And then the MACD you can use on larger time frames, but yeah, bullish divergence and bearish divergence can be used on large and small time frames. Okay, and especially on large time frames, if you're trying to put on swing trades, it's really good for that. Okay, so just wanted to kind of share that today. What is convergence or divergence? Actually, what's divergence? And yeah, divergence can help you predict future price direction along with those changes of structure or changes of direction. Okay, so it's your boy, Mr. Fit to Flourish. Short video today. Hope you learned a lot. I'm out of here.